Welcome to our corporate accounting class. Now we are going to discuss another one important problem in the chapter called profit prior to incorporation. See, this is another one important problem. It is very simple to understand. No complicated adjustments given in this problem. So, for want of understanding how to solve the problem, this will helps you, right? Take problem number 23, page number 4.21 in Jain and Naran book, Corporate Accounting 1, Jain and Naran. See, this is the very opt problem normally for section A, that is for 5 marks. And sometimes the same will be asked for essay type question for 15 marks also or 10 marks. Okay, then first we will take slightly some different information is given. The same old concept, gross profit minus all the direct indirect expenses, that will gives you the profit. But here what we are having is separate sales for two different periods and separate purchases given for two different periods. So basically you know very well, sales minus purchases minus direct expenses, that will gives you the gross profit. Also please note down, sometimes you may be given with sales minus cost of sales, that will also gives you the gross profit. In this case we are not given with the uh, cost of sales, we are not given with the direct expenses, simply we have sales then purchases. So what we have to do, sales minus purchases, that will give you the gross profit. This is point number 1. And point number 2, various direct expenses are given. Okay, so first step we have to calculate what is the sales ratio. In the problem itself we are given with the sales for two periods, pre-incorporation period, post-incorporation period, 1,20,000 and 1,80,000 for the post. So if we simplified, 1,20,000 is to 1,80,000, that will gives you the, first you eliminate the zeros, then you will get 12 is to 18. Further if you simplify that, 4 is to 6 and 2 is to 3, that 2 is to 3 is the sales ratio we have to take. Then another one is time ratio. How to take the time ratio? 1st January to 30th June. Why 30th June? It is given that January you purchased the business and 30th June you registered the business. So registered in the sense it is incorporated. Okay, either given as incorporated or registered, both the things are same. So first we have to take 1st January to 30th June is taken as pre-incorporation period, and since it is registered as 31st since it is registered as 30th June, so we have to take 1st July onwards we should take the post incorporation period. So the post incorporation period is 1/7 to 31st 31st December, because it is specifically given 1st January you are starting the business, year end of the company, year end for the business is 31st December. So we are taking first 1/1 to 36, that's 6 months, then 1/7 to 31/12, another 6 months. So 6 is to 6, it is supposed to be 1 is to 1, or you simply take it as equal ratio. Now we will take the expenses. First one, sales minus purchases, that gives you the gross profit. In previous problems we have to apportion the gross profit into we have to apportion the gross profit, we apportioned the gross profit on sales ratio, whereas in this problem that is not the case. Gross profit is specifically we are getting for two different periods, that is pre and post. So 45,000 and 60,000 we have taken, that is sales minus purchases. Then take salaries. You know very well, salary is taken apportioned on the basis of month, on the basis of time ratio. Here the time ratio is equal ratio, So total amount of 15,000, 15,000 is apportioned divided by 2, 7,500 and 7,500. Another one is the selling expenses. Selling expenses is apportioned on the basis of 2:3, that is a sales ratio, that comes to 1,200 and 1,800, that is 3,000 is apportioned like this. Then depreciation, total amount of depreciation given in the question is 1,500, is apportioned on equal ratio, so 1,500 divided by 2, 750, 750. Then director fees or director remuneration, whatever the term, information, director fees or the director remuneration, if it is given, is supposed to be for post incorporation period only. Again I am explaining, it is meant to the post incorporation period only. Why? Because director is a person, he will come into the picture only for company. Okay, so the amount of 750 straight away it is taken to the post incorporation period. And another one is a debenture. Debenture is also like that, because debenture can be issued only by the company, joint stock company, not applicable in any other forms of a business. Proprietary concern, partnership concern, they cannot issue the debenture. Okay, so debenture is applicable only for the company, so it is taken for post incorporation period. That amount of 990 is taken for the post incorporation period. Another one is administrative expenses. So any amount of administrative expense, miscellaneous expense, general expenses, all those things are apportioned on the basis of time ratio. Here the time ratio is taken as equal ratio. So the amount of administrative expenses is equally taken for both the periods, 2,250, 2,250. That is 4,500 is taken bifurcated equally for pre and post incorporation period. Then already we ascertained, we showed the gross profit minus expenses, the balance is supposed to be for final profit. Okay, the total profit is divided into, apportioned into pre incorporation period, that comes to 3,300, post incorporation period, which is 46,860. 46,860. See, the main point here is, in the question we are asked to show only the post incorporation period. Okay, we are required to show only the post incorporation period, but anyhow, for want of experience, for want of knowledge, I have shown the both pre incorporation and post incorporation period. Okay, this is another one simple problem, easy to understand for section A. Sometimes, if you are fortunate enough, we will get the same problem for 10 marks. Okay, so practice related problems.